If you're planning to buy a home with your VA loan in 2026, I have a warning for you. That piece of paper a lender gave you with a 5-minute phone call, it might be worthless. I see it happen often. A veteran gets a pre-qualification letter, finds their dream home, puts in an offer, and then crickets. The seller chooses another buyer. Why? Because in today's market, a basic pre-qualification letter is not enough. It's just a guess. And listing agents in competitive markets like San Diego know the difference between maybe and a sure thing. If your offer isn't backed by a full, underwritten pre-approval, you're showing up to the gunfight with a plastic spoon. I'm Cathy Sabater, Navy veteran and mortgage broker, and today I'm taking you behind the curtain. We're going to walk through exactly what a VA underwriter checks before they give you the green light. By the end of the video, you will be able and know how to get a pre-approval that is almost as good as cash. Welcome back to my VA Homebuyer Roadmap series. If you're new here, my mission is simple. I'm here to help veterans build wealth through real estate with honesty, education, and a clear plan. That is the hero way. Help each renter own. This is video 4, and we've already covered the why of real estate, how to get your certificate of eligibility, and the truth about the VA entitlement. If you haven't watched those videos yet, please pause and go back. You need that foundation. Today is when the rubber meets the road. This is knowing your numbers so cold that you can make an offer with 100% confidence, as much as I possibly can make you feel, in a market where the 30-year fix is hovering in the low 6% range. Knowing exactly what you can afford is more important than ever. First, let's clear up the biggest point of confusion. What is the difference between a pre-qualification and a pre-approval? A pre-qualification is often based on unverified information you provide over the phone or online. The lender runs a soft credit check, takes your word for your income, and gives you a ballpark number. It's a good starting point, but is not a commitment to lend. A pre-approval is a completely different animal. This is where you provide your pay stubs, your W-2s, your 1099s, your bank statements, and or your tax returns. An actual human being, a person, called the underwriter, will make the final decision on your loan as they review your file. They crunch the numbers, verify your employment, and check your assets. When you have a fully underwritten pre-approval, you are practically a cash buyer. You've done all the hard work up front. All that's left is for the house to appraise and for the title work to clear. This is a gold standard and is what's needed for 2026. There are 4 pillars of the VA underwriting pre-approval. So what is the underwriter actually looking for? Well, let's break it down into 4 main pillars. Pillar number 1, income and employment stability. Pillar number 1 is the income. The VA wants to see stability and continuity. The 2-year rule also applies. They also want to see a 2-year history in the same line of work. If you have graduated and started a new job in your field, that school can often count towards the 2 years. W-2 versus self-employed. If you're W-2, it's pretty straightforward. We need your most pay stubs, we need your most recent W-2s, and your last 2 years of tax returns. If you're self-employed, it gets a little more complex. We need your last 2 years of your personal and business taxes to calculate your 2-year average of your net income, not your gross revenue. You also have variable income. Do you have overtime, bonuses, commissions? We can usually use this income, but only if we have a 2-year history of receiving it and, most importantly, likely to continue. VA disability and military pay, that's tax-free, which means we can gross it up and help you qualify for more. So for active duty, we'll need your LES, Learning and Earning Statement, to count your base pay, your BAQ, your VAQ, and most importantly, any special pays that you get. Pillar number 2 are your assets. Although VA is zero down, you have to ask yourself, why do we need your bank statements? Well, here's why. Even though there's no down payment, there are still closing costs. Things like title fees, recording fees, prepaid property taxes, and insurance. The seller might pay for some of these, but we need to show you have funds if they don't. We also need to verify your earnest money deposit. This is the deposit you make when your offer is accepted to show you're serious. The underwriter needs to see the money leaving your account. Large cash deposits, please, for the love of everything, do not deposit a stack of cash under your mattress into your bank account right before we start. Cash is unsourceable. It is the number one way to kill a VA loan instantly. Finally, the underwriter is looking for large, unexplained deposits. If a random $10,000 just appeared in your account, they're going to ask, where did it come from? It can't be an undisclosed loan. If it's a gift from a family member, we need a gift letter to document it. Pillar number 3, credit and debt to income, DTI. Pillar 3 is your credit profile and your debt to income ratio. The VA doesn't have a minimum credit score requirement, but most lenders have their own overlays. A score of 620 or 640 is a common minimum, but I have lenders who can go down as low as 580 or even lower in some cases. Your DTI, debt to income, is the percentage of your gross monthly income that goes towards your debt payments, including your new mortgage. The VA prefers a DTI of 41% or lower, but it's not a hard cap. I have seen VA loans get approved with over 50% DTI. And that's because these borrowers have strong compensating factors. They have high residual income. Speaking of residual income, this is unique to the VA. It is the amount of money you have after you pay your mortgage and all other debts and taxes. The VA sets a minimum base on your family size and where you live to ensure you have enough money for grocery, gas, and utilities. This is a huge safety net for veterans. The top 7 things that can blow up a VA approval: don't do this in escrow. Don't get a new credit card. Don't go car shopping. Don't put big deposits without paper trail. Changing jobs without talking to your lender first. Switching from salary to commission in the mid-process. Undisclosed debt, especially payment plans. Venmo, Zelle, cash movement with no explanation. My friend will give me a gift, but no gift paper trail if you avoid these to eliminate the drama. The 2026 market reality. Now, let's connect. This is the 26 market. We are starting the year with the 10-year Treasury around 4.17%. That's the Treasury, and the mortgage rates are around the low 6%. In this environment, affordability is key. A rock-solid pre-approval doesn't just tell a seller you're qualified. It proves you're a serious buyer who can close. In a competitive market where inventory is still tight, that certainty is its weight in gold to a seller. They don't want to take a risk on a buyer whose financing might fall through at the last minute. So here's your action plan. Do not settle for a flimsy pre-qualification letter. Demand a full underwritten pre-approval. It's more work up front, but it will save you heartache later on. And if you get serious about buying in 2026, I'm here to help. You can find a link below to book a strategy call with me. And let's get your file in upfront to the underwriter so you can shop with confidence. In the next video, we're going to talk about The fun part, house hunting and making an offer that gets accepted. You don't want to miss that. And I'll see you on my next video.